Hello, chart watchers, and welcome to this Tuesday, April 16th, 2019 Market Watchers Live Show with your hosts, Tom Boley and Erin Swenlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Taking a look at the market action so far, we've got the Dow Jones Industrial Average up 53 points, the S&P 500 up 3, the NASDAQ up 24, and the Russell 2000 up 3. 10-year Treasury yield moving higher, breaking above that 2.55% yield resistance that we were watching, up 4 basis points today, 2.59%. Volatility index continues to decline back below 12 earlier today, although we are slightly above that level right now. Financials and technology leading to the upside, having good days today, while real estate is definitely the weakest group, breaking back down below its 20-day moving average, having a rough day today, down 1.7%. Media agencies trying to make a breakout today. Omnicom, you can see over here, actually reported earnings. Missed a little bit on revenues, but beat bottom line. You can see this stock making a big breakout. It is breaking out above multi-month highs. So this is a pretty big breakout on OMC, and that is helping the media agencies group higher. Semiconductors in that technology space also having another really nice day today. Been a strong last couple of months here, especially the past 2 or 3 weeks, with the semiconductors climbing, trying to get above that 3,700 level. We were just down at 3,200 a little more than a month ago. Big move on the semiconductors. Okay, Erin, it's Tuesday. Tax day is over. Hopefully that tax is done.
Yes, I actually stood in line at the post office yesterday just to mail a letter to make sure it would be postmarked to the state, the only one I owed money to.
No sense in waiting until the last minute, right?
No, exactly. Well, if I have to pay them, I'm sorry. I'm going to give them as little access to my money as possible.
They got to keep it in that account and earn those big interest rates. Get that
right
income.
Hey, I have a lot of that in investments. I try to grow it before I give it.
Idea. I'm not going to argue with that one. That's for sure. Well, we got another big day coming up. Of course, the market getting closer and closer to that all-time high. The S&P 500 I just went over the update there. It's above 2,900. We're only about 1% away now from that all-time high.
Wow. I suspect, we're going to hit it eventually. I've been thinking that this is going to be a ceiling and we might get a pullback. I don't think a correction. I think there's too much complacency, but not enough for a correction anyway.
Well, I think the earnings are going to dictate it quite a bit. A lot of earnings expectations were lowered the past couple quarters with the big drop we saw in the S&P in the fourth quarter. But so far, only early results are in. But so far, I think earnings have been pretty good for the most part in some of the bigger banks and so forth that we've seen. I think that was an area that's been underperforming. I think a lot of folks were expecting some maybe not so great news out of the banks. And so far, I think they're holding up pretty well.
Absolutely. I have to agree.
All right. Well, we got a big day, including your workshop. So why don't we get things started?
Yes, let's do that. Tom McClellan is going to be here tomorrow as our guest. And then Julius DeKempener will be a guest and a guest co-host on Thursday while Tom is out. And then Friday is a holiday for us. Stock market is closed, so not a whole lot to talk about. So we won't be broadcasting live that day. And today we will be looking at my favorite scans. I had some requests to do scanning. I figured instead of doing actual scanning, we would, I will do some of that, but I wanted to go over my favorites and why. And then 10 and 10 for symbol Walgreens. And our final segment, Tom is going to look at stocks that are under the radar. So stay tuned. Let's go ahead and get it kicked off. Technical news and headlines. Tom?
All right, sounds good. First, we'll go into the economic reports out this morning. March industrial production came in negative 0.1%. Market was expecting a 0.3% rise, so a little disappointing there. March capacity utilization also came in just below expectation, 78.8% versus 79.1%. But that 78.8 is above last month, so things do appear to be picking up a little bit. April housing market index 63 versus 63, so no big shakes there. And of course, taking a look at what's going on in the bond market, we can see the 10-year Treasury yield here moving up and testing the 50-day moving average. Now, we look back since that big drop in November, we've only had one instance where we got that move above The 50-day moving average, we got up there and lasted for about 3 or 4 trading days and then right back down below. Notice the 20-day moving average never went above the 50. And then the other thing that I've been watching too with the 10-year Treasury yield is when you're in a downtrend, typically the RSI doesn't get back up above 60. When you're just sideways consolidating, we look at the range between 30 and 70. When you're downtrending, I look for maybe a max around 60 on the RSI, and then it's not unusual to see these the drop in the RSI down below 20, or excuse me, down below 30 into the 20s, sometimes even into the teens. And when we're in an uptrend, a lot of times we'll see the RSI move through 70, maybe even up above 80, with pullbacks holding around the 40 level. Well, if you notice the last time we pulled back here in the yield, the RSI came back down to about 40 and then moved higher. And currently we're up near 57. So we're not through that 60 level yet, but I would watch a couple of things here. Number one, I would watch to see if the 10-year Treasury yield can get through the 50-day moving average and sustain it, meaning stay above it. And then also eventually look for that 20-day to come up and cross over the 50. So there's a lot of things going on. RSI, we want to see that get through 60 as well. I'd like to see the PPO get into positive territory. All of these things would line up more with an uptrend in the 10-year Treasury yield. And of course, if the 10-year Treasury yield begins uptrending, that is your money rotating away from the defensive treasuries. It's just more money potentially that could go into equities. So I find it to be a very bullish signal if we do continue this uptrend. So it's worth keeping an eye on. Earnings season beginning to pick up here. We did have last night after the bell, JB Hunt Transports. Talked about that one not looking very good on those relative charts. And you can see here, of all the stocks listed, it's the only one that missed its earnings estimate. Came in at $1.09 versus the $1.25 expected. Some of the big companies reporting this morning, Johnson & Johnson, Bank of America, United Health, BlackRock, all beat earnings expectations. They didn't all beat revenue expectations, but they did beat the bottom line. And most valuation models are based on bottom line, not on the top line. So something to keep in mind. Later tonight, Netflix, IBM, CSX, UAL, and Interactive Brokers, IBKR, all report, among a number of other companies. As we go through this week and the next couple of weeks, earnings season really going to kick into full gear. I think a lot of emphasis should be placed on these relative charts. If you like to hold stocks into earnings, I would feel better holding stocks that are showing a lot of relative strength heading into their reports. Ones that are not, I think, can be problematic. First, let's pull up that JBHT chart, and I'll show you exactly what I'm referring to. I talked about this a little bit yesterday, but here is JBHT, and you can see after making a move up in February, the truckers made a move up in February. We have not been able to sustain those gains. We've started to roll back over, and just look at the relative charts here. JBHT relative to the truckers, it's one of the weakest, and with its report today, it is now breaking to a new 52-week low on a relative basis. It obviously is a poor performer relative to the S&P 500, and truckers in general, just not a very good area of transportation right now. So I would say, looking at a chart like this, I wouldn't want to hold it into an earnings report. Today it gapped lower. Currently it's down 3.5%, but it was down lower at the open. Probably another, 1.75%. It's probably down about 5% at the open today, though. And I would try to avoid those as best as possible. I don't like holding stocks into earnings, but I especially would be leery of holding stocks into earnings that are not performing well on a relative basis, because it's telling us that you've got a lot of folks on Wall Street getting out, bailing on these stocks before, leading up to the earnings, and they have access to company management. They find out what's going on in terms of their product pipeline, their sales pipeline, and so forth. So I think it's worth paying attention to. All right, let's look at some other charts of stocks that reported earnings. First, we'll go into J&J, Johnson & Johnson. This was not a bad report. Looking at the top line, they did beat $20.02 billion versus $19.55 billion. Bottom line, $210 versus $203. They reaffirmed their guidance, didn't raise guidance, but reaffirmed it. The stock was trying to make a breakout earlier today above this double top, but so far failing to do so. I think there's a lot of overhead resistance still here. There was a ton of sellers that came into this stock starting at about 143 and change and sold all the way down to 120. We've had a pretty nice bounce here, back up to close to that 140 level, actually a little bit above it earlier today. I think this is an area I'd be a little careful with J&J. Bank of America extending those bank earnings reports that we saw last week and yesterday as well. Bank of America, I thought, reported pretty decent numbers. Their top line missed by a little, 23.0 billion versus 23.2 expected. But they did beat on their bottom line, 70 cents versus 65 cents. I did not see guidance coming out from Bank of America, but I think after the move to the upside, I think we just continue to consolidate sideways. Banks overall still need to make the breakout above not only the March high, just above 450, but you got a double top dating back to November that I think really we need to clear. So I'm going to say 460 is going to be a bigger number on the bank index. The good news for Bank of America is that it has been one of the better performers. And I think as long as it holds its relative strength line here, this relative strength support line just above 0.0650, then I would be okay with the stock as a holding in the banking area. Now, I'm still not a huge fan of the banks. I think we need that 10-year Treasury yield to continue rising, make those breakouts that we talked about earlier, and then I think we might be on to something with Bank of America. UNH, United Health Group, they did beat top line. They beat bottom line. The stock gapped up, but the selling continues after the open. And so I think what this is just telling us is that there's more going on as we look down the road, because the report for last quarter was not bad. So I think UNH, a lot of the market participants dealing with this company are looking down the road, not really liking what they're seeing. This is massive volume that's been coming in, not just the last few days on the selling, but if you look back to the end of February on the selling, big volume, look back to December when the selling started, much heavier volume than what we had seen before. So I just think there's a lot of distribution taking place right now in UNH. And when we look at the healthcare group in total, we are at a 52-week low. And considering what the overall market's been doing, this is a group that I would avoid. I just don't see the need to try to catch a bottom to be a hero in a group that's performing so poorly. BLK, this is BlackRock. They did come out, beat top and bottom line, making a nice move to the upside, trying to make this breakout. Volume picking up a little bit here. It is in the asset managers group, which is now trading at about a 6-month high. So we are starting to see a little bit of strength coming into the asset managers. And if you look, BLK is one of the leaders in this space. Still, over the last year, it's not been a great performer against the S&P because the group has been so weak, but things are beginning to improve. And you can see we're getting a relative breakout here on BLK. So I like BLK as long as it holds. Now, again, it's been a part of an underperforming group, so I wouldn't have a whole lot of patience with it. I think if it closed back below 440, I'd be real nervous. So, but otherwise, I would stick with it if I owned it. OMC, I wanted to bring this one up because I did mention it earlier. They did report. Look at all these tops, and this is what I was referring to. This is a big breakout after sideways consolidation. You can see the entire group making that same breakout. OMC relative to the group strengthening the past 2 months. And so if the group can continue to strengthen, especially break out above that late February, March relative high, this is a group that could do well. OMC now appears to be on track to perhaps be a leader given that breakout, assuming it holds. All right, just a couple more things. AT&T came out and announced that they would be selling their 9.5% stake in Hulu for $1.43 billion. That valued the entire business of Hulu at about $15 billion. Just using that maybe as to look at Roku and maybe Netflix, obviously much bigger, but that'll give you some idea of the value placed on Hulu. And AT&T overall still has some work to do, though. We've got some overhead resistance up near 32.5, 32.75 that we have failed at on multiple occasions. We're getting up close. We're going to need more volume, I think, to make that breakout. And the last thing I wanted to bring up was gold. Actually, I can just bring this up on a relative chart. It's not going to show here because the gold index is updated at the end of the day. That's what that EOD is. But I can tell you right now, or at least last time I looked, maybe 30 minutes ago, gold was down $14 an ounce to $12.77. And when we look back, that would be the lowest level. If it closes there, it will be the lowest close of 2019. So gold on the verge, possibly breaking down. All right, Erin, upgrades, downgrades, and then on to your workshop.
Yes. You can go look at the market and your trading. All right, here we go.
I'm sorry, I didn't catch that.
Oh, you can go off and start looking at your trading and watch what's going on, since I'm going to be talking a while.
Oh, there you go. Go ahead.
All right. So let's go ahead and we'll start off with our upgrades and downgrades. Let's see here. First of all, Netflix was upgraded today by Deutsche Bank from a hold to a buy. They have moved their price target from 360 up to 400. So looks like they certainly expect to see overhead resistance at about 380, 390 to be beaten. And to me, if you get to that level, I think 400, you could certainly go to the 420. I would start looking for overhead resistance there. All right, next one. And really for the upgrade, it was sort of interesting because we had just gotten a breakdown from that short-term area of support, and then additionally below that 50-day EMA. So I thought it was kind of interesting to see Netflix hop on the upgrade. All right, Western Digital. Deutsche Bank also upgraded Western Digital from a hold to a buy, and they moved their target from $45 to $60. And again, looks like this area of overhead resistance formed by that August low, the September top, that's about where they're looking for it. I think that this chart is certainly encouraging. You have a breakout now above the 200-day EMA. All the way back here, though, in February, early February, we've got an intermediate term trend model buy signal. We didn't see that much come off of that. There was a lot of sideways action. PMO started to pull back because of that. And now we're getting the breakout, and it's breaking out above the 200-day EMA. So I think Western Digital is looking pretty promising right now. All right, let's look at a few downgrades. Cognizant Technology Solutions was downgraded today from Wells Fargo, downgraded from an outperform to a market perform. So basically setting it up in neutral. They had an $82 target, which would have challenged this high back here in July, but they have decided to change it to 75, which would be right here at that overhead resistance. In the short term, so it makes a lot of sense. It did break down below not only the 20-day EMA today, but it looks like it might break down and close below the 50. If it can get a little bit of momentum to the upside here, we might be able to avoid a close below the 200-day EMA. Very ugly PMO. It looks like it had just started to try and rise, and then we got this really bad day on the downgrade. So I think I would look for a drop at least to that $70 level. If we get to that level, though, I could see it certainly moving lower at that point as well. I'd be wondering what's going on with the PMO and looking at the OBV, because this move, honestly, when I see an OBV rising like this and price had been rising, and then it started to flatten out, but the volume was still rising, but we weren't getting the kind of oomph you'd want to see with that sort of an OBV configuration. So that was a little bit of a warning before we got the decline. And of course, the scooter was already starting to move down as well. All right, another downgrade. EOG Resources. This one was downgraded by MKM Partners from a buy to a neutral. Their new price target is at about 109, which would have put it right at that overhead resistance from those November and December highs. You've got the PMO buy signal that came in mid-March, timely, I would have to say. Right now, you can see that volume is starting to pick up here on the OBV. And I like that coming in on the price rise. So that's really what you want to see. The only concern I have to say I do have would be the fact that we have declining tops here on the OBV, and we've got rising tops on price for those two areas. And so that is a negative divergence. Hess Corp was downgraded today from a buy to a neutral, $71 price target. PMO's on a buy signal, somewhat overbought. We've seen it get to -10, so I would say +5 is not going to be that overbought. And, you know, we've got a really nice price rise. It's been coming off of that December low. PMO buy signal, like I said, and very steady, flat PMO. That's not a problem, really, because you're looking at steady acceleration to the upside. And it did prevent the PMO from getting too overbought, which means it can accommodate more upside. And finally, Kinder Morgan was downgraded today from a strong buy to an outperform. So this was really sort of a lukewarm downgrade, I'd have to say, since they're still looking at it to outperform. You know, we got the sell signal back here in early March, and it really didn't do much. It moved sideways. And again, that's where you got the PMO pulling back like this because the momentum started to fade and it was moving, you know, pretty much steadily sideways. And so that managed to get the PMO to unwind, which I usually, you know, I like to see. PMO is starting to decelerate somewhat. It is holding this area of support. So I can see why they maybe went out of the strong buy position, because I suspect that $20.50 area might be a pretty strong area of overhead resistance. It sounds like they are expecting it to do well, but they're not going to go in on a strong buy. And that's it for the upgrades and downgrades. Here are the symbols I went over and the long, long list of those that I did not. I'll have this in the Market Watchers recap if you want to go back and take a peek at it later. All right, though, time to move on to my workshop. So let me get that together for you.
Yeah, looked like there were a lot of downgrades today.
There were a lot of downgrades, and it's always surprising sometimes, you know, when I open what the list is, it could be very little or it can be a lot. And I don't know. I don't know if there's a conclusion we can make about the fact that there were so many more downgrades. It just seems to be back and forth.
I think some of them are like the equivalent, though, when we see a stock that's overbought, we say it just needs to pull back, because a lot of those downgrades are valuation downgrades.
Mm-hmm. Exactly. And like I said, with that last one, we only downgraded back to an outperform from, you know, a strong buy. So yeah. Not too bad. All right. This will be my workshop for today. I'm going to go over my favorite scans. And then, of course, they wouldn't be all that useful if I didn't tell you how to use them. So I will do my best to go through the way I sift those scans. So first I'll talk about each of the scans, and then we'll run a few as we go. And I'll show you just, you know, really cold, I would have to say, what I'm seeing and how I see it and how I pick. So hopefully that'll be helpful to you as we go along. Before we get started, though, I do want you to know a few things. First of all, if you have a basic membership, you have access to predefined scans, but you need to have an extra or above service level in order to create scans or copy my scans so that you can use them. So you can use that advanced scanning workbench. There are things that you can do with scanning that you really need to have an extra membership or above. And honestly, of all of the things that we can do on stock charts, minus charting, which is a big deal, but would be scanning. I think the scan engine is what really gives you the bang for the buck here at StockCharts.com. You know, it's one thing to be able to look at a chart, but it's a completely different thing to be able to scan an entire universe of stocks or sectors or industry groups and pull out the ones that you like that look good. And then you're only evaluating a handful. You're not just kind of randomly looking at, you know, who's most active or, you know, what's on the scooter list, or, you know, it's nice to be able to scan and get those. So what you should know is as you're going along, you can update and generally change them as you're running them. I just don't save my changes, but I'll show you how to do that. I recommend, if you haven't done it already, and if you do scan and you're an extra member or above, to create a scan dump chart list. And I show this to everybody on Market Watchers Live at least 3 to 4 times a week. And it's basically your chart list to dump your results in. It's a place where, you know, anytime you put anything in that chart list, you're not saving it. you're not saving it. So it's just a place to dump them, because if you're scanning, you're going to do 1, 2, 3, you're going to keep scanning, and you don't really want to create a chart list for each and every one of those scans. It could be very confusing. So I like to run one scan, go to the scan dump, save it to my scan dump, and then go through the stocks that way. So I'll be demonstrating that as well. And then all of our scans can be converted into alerts. You just have to copy it into the alert workbench. So if I have time, I'll show you how to do that, but I'm not so sure I will. All right, so these are my favorite scans that I'm going to go over. And these are sort of in, I would say, order of my favorites, with the exception of the scan for dogs, because the scan for dogs is a bear market scan. I only have one of those. It's basically a reverse of my bullish general price momentum oscillator scan. But it is, I make it separate. I don't have to think about it. I want to have that one available if I feel like the markets are looking bearish, or if I'm not getting any results from my bullish scans. That a lot of times can tell you, a lot of stocks are beaten down. We're not seeing new momentum, and that can give you a sense of where the market is going and what's happening out there. And so you might want to be looking for dogs, as I say, shorting opportunities. I like to use that scan, but I don't short very often. So I'm generally in cash. It's just my risk aversion. All righty. So you run a scan and then you don't get any results. Well, what do? Well, if you really like the scan, what I like to do is I just add these bars, the slashes, right before the lines that I want to leave out the next time I run it. For example, my scan might say I want the PMO to be rising for 3 days. Well, if I use this on the last line, it'll cancel out that 3rd day. So now I'm only scanning for PMOs that are rising for 2 days. So it's very helpful to do that. If even with that, you're just not getting that many results, or you're not happy with them, it's best to just go and try a different scan, and you can always manipulate that other one. All right, well, if you get results, now what? Well, if you have too many of them, you need to narrow the search. And when I say too many, for me, if I'm getting much more than 50 to 60, that's too much. If I get to like 100, those higher numbers, because you can get 500 results from a scan. So I don't have the patience, and my eyesight isn't what it used to be. So I'm really not going to want to look at all of those, 150, 300 that may come back on my scan. My scans, though, are typically narrow enough that I don't get scan results that are more than, maybe 150. I rarely see over 100 on these scans. All right, so you get those results. If you have too many, narrow the search. Add in a line that says, no, only look at this sector, or only look at these 3 sectors, or concentrate on this industry group. It's pretty easy to narrow those searches, and I'll show you how to do that. And again, save it to your scan dump chart list. And then the best way to review, especially if you have more than 30, 40 charts, is in Candle Glance. And I created my own Candle Glance that has the indicators and all of the things that I like in it, so that when I use the Candle Glance, I'm seeing exactly what I feel I need to in order to evaluate quickly whether I like a stock or whether I don't. And then the one thing to remember as well is be really picky. Delete freely if you if you see something that's just not, it's not great. It may be good, or you like this, but you don't like that. Just delete it, because more than likely you'll find something that meets all of your criteria. So just delete freely and be picky. And if you don't find something, well, I don't know. I personally don't force the issue and try to find, just do anything to get a stock or two to invest in that day. I try to be more patient, and I hope you all are too. All right, so we get those results. This is my sifting strategy. So I just wanted to go over some of the things that I look for. So I like to find, I look for support and resistance levels, of course, and this is while I'm looking in candle glance. I'm looking at a bunch of little thumbnails of charts, and I can do this, and you can do this, to sift through and figure out which ones I like. So I like to look for the support resistance levels. I look for the prominent chart patterns because you can see that if you set up your candle glance the way you like it. So those are always good. I look for PMO configurations that look good above the zero line or oversold, breakouts and breakdowns. Those are pretty obvious. And then, of course, divergences and confirmations. And then finally, EMA configurations. Now, generally, my scans have the EMA configuration in it, but not necessarily does it tell you whether price is above or below. I only scan for whether the 50 EMA is above the 200-day EMA, that sort of thing. All right, so let's go ahead and move into some actual examples here. And here are my list of scans, and I'll go through some of them in more detail, like my favorites, the ones that I really, really favorited. But those others that I have listed, I'm also a fan of, so I'll show you those as well. And as we go through, I should have time. What I'll do is I'll show you the scan, I'll explain the scan, we'll run the scan, and then we'll move on from there. But before I even get started with that, I think it's only fair and it really is necessary is to set up a candle glance, the kind of candle glance you want to look at. So for example, if I have a list of stocks, for example, the top 10 on the New York Stock Exchange, candle glance looks like this. Only you notice mine is a custom style. So mine is a 6-month chart with OHLC bars. It has the 20 and 50-day EMA on it, and it has the PMO, of course, on it. Those are my basics. Those are the basic things that I'm going to look at. Those things have to be right in order for me to even go further to evaluate a stock. I need a PMO and EMAs that look good. So that's right off the bat the kind of things that I'm looking for. But it's really hard to do this if you're using one of the chart styles presented for you. Not that these are bad. They're 6-month charts. They use, I believe, the 20 and 50-day simple moving averages, I believe. I'm not going to, I think I might be able to get to it now. All right, so you need to create a candle glance chart so that you get the things on it that you want. I recommend, of course, the PMO be on it. So what we do is we create a style that we like, and then we call it candle glance. So here I actually have a couple of extra candle glances just in case I want to look at something different. So this is one of them. This is the main one. Honestly, I think it looks exactly the same as the one I'm using right now because it's my primary, but it's 6 months, and there you go. Those are the EMAs on it. And so that's how I did it. I saved it as candle glance, and now always this is the style that will come up when I use my candle glance. But like I said, sometimes I have a secondary one that I might want to use. For example, this one is a daily chart, of course, and it's only, though, for the last 3 months. So sometimes I may want to look at this. Typically, I want the 6 months just because you can see how the PMO is really stretched out. I think it's a lot easier to look at it on a 6-month chart to get a really good feel for what's going on with it. All right, now we know how to create the candle glance. We now know how to move it to candle glance. Let's go ahead and look at some of these scans. This is the fun part anyway, isn't it? Okay, we'll start with my general PMO scan. This one, all of these scans, since I am going over them today, I will actually print up all of them in the Market Watchers Live recap. I'll have them typed in there so you can actually go in if you'd like and copy and then paste them in to your own. So they'll be available for that. And of course, you can always modify them too. Okay, so the first thing you'll notice on pretty much all of my scans, except for the focused ones, I narrow down my universe to stocks in the US. And I like to have the 20-day simple moving average of the volume to be over 100,000. Now, this is something that I will sometimes use to narrow the field. If I do get a lot of results, that's an easy way to do it, and I don't mind giving up some of the smaller volume stocks. So that's a really good place to consider right away to go and eliminate some of the results you have if they're too many. I don't like penny stocks. I don't really want something so high volatility, so I like to keep them at least above $10. Now this is where the meat is. So the first thing is I have my price momentum oscillator, similar to the MACD, the PPO. And I want to see that it hasn't yet had the crossover. So I want it to actually not be on a buy signal yet, because I want to see the PMO having been rising. I want it rising for 3 days, but not having the crossover. So it's increasing the momentum, and then it hasn't had the crossover. So my risk involved here is I'm not waiting for the crossover. I'm just looking for something that's really starting to hit on its momentum. A lot of times the price will have run pretty high, and maybe I don't want to get involved if it's too much. But that's what Candle Glance is for. That's how I eliminate things. But basically, I want a PMO that's been rising, and then I want it to be below its signal line. I don't want it to have gotten a buy signal. Now, the other thing I like in a stock, I really like to see a positive intermediate term and long-term trend model configuration. And what does that mean? Intermediate term, I want the 20-day EMA to be above the 50-day EMA. And for the long term, I want the 50-day EMA above the 200. And then I like to look for stocks with a scooter value above 75. Greg Schnell, I think, is the one who coined the phrase hot zone. If it's a greater than 75, the stock is generally strong. It's certainly relatively strong to its peers. So that's something I look for as well. Now, I won't go through great detail as we go along on every scan, because you'll see a lot of repeat to the scans. All right, so I'm going to run it, and let's see what we get. 13. Okay, well, that's great, because that is certainly, I don't need to change the 13 I can look at. I'm happy with that. So let's move. I'm going to replace a chart list, and this is where scan dump comes in. That's where I always put every result to every scan. Now, if you do save it as a new scan or a new chart list, just realize you're going to have, it'll be dated. It'll tell you the time you ran it, but that's really about it. And if you have too many chart lists with scan results, it's just going to get confusing. So I find it better. Like I said, I highly recommend it. Drop your results into a scan dump, and then the things you find interesting in there, move them into your watch lists, your whatever it is that you use to organize. DocuSign, that came up yesterday, so I find it interesting. It's still here. So anyway, I've got them all in my chart list, and now I want to review them. With only 13, I really could go chart by chart, but I want to show you how Candle Glance works, and this, I usually go to this regardless. All right, so we had 14, 15 results here, 12, 13. So let's go ahead and take a peek at what they are right now. So I go right off the bat. Remember, I had my, in fact, I'm going to pull it out over here, my strategy. So the first thing I'm looking for are easily defined support and resistance levels. Well, clearly right here you have what was a resistance level. It's managed to get above it, coming back, it looks like below it. So that tells me that it's failed at overhead. It managed to get the breakout, but the breakout failed and it's coming back down. So this one I'm going to just eliminate. You could make a case for a flag here, but again, why am I making a case for something? I'm just going to get rid of it. Right now, this one's been on a really nice run. The acceleration has been really even, which is why the PMO is mostly flat, but it's a runner. I don't want to chase. Now this one I find interesting. You have overhead resistance that was broken, and it looks like it's still trading above, and the PMO is about on a buy signal. So I'm going to click on this one because this looks interesting. And there you go. So the PMO is flat. And remember, that's not necessarily a bad thing. That just indicates that acceleration has been mostly even or flat. So that's why you're getting the flat reading. But here it is. There's that breakout in the shorter term. I noticed, though, that it's coming up with more overhead resistance here at that August top. I couldn't see that because I was on a 6-month chart. So now I've already seen that overhead resistance here at that high from August is coming up. I probably would add it to the watch list, but I would want to see what happens and if it can break out above that August top. So if I wanted to do that, I can say, okay, let's save this one to watch list, and then boom, save, and there you go. All right, now let's go back to our scan dump and view all of them. And go back to candle glance. And here we go. So again, I'm giving you my strategies here as we go along. So this one, I like the way the PMO is set up. There's still some room to get for overhead resistance. It's not that interesting to me just because of the way the price movement is. It's, it's moving sideways. It does tend to move up, move sideways. This one could be interesting. This is DocuSign. This is the one I picked yesterday. So I pulled up the chart. Hasn't had the buy signal yet, which is something I do like to look for. It has overhead resistance at 60, so there's room for it to move up higher. And certainly the PMO is doing what I want, turning up over the 0 line. So this could be a flag right in here, and we could be making our move up to test that 60 level and move higher. So that one was on my list yesterday, and that was why. All right, let's go and look at a few more scans. I don't want to run out of time here completely. I got to go pick up those 10 and 10s for you. Okay, so I'm going to go back to this technical scan workbench. And let's look at, so the focus PMO scan, same scan I just showed you. Only the difference is I'm putting in sectors. I focused it. I moved it down. We already know I'm not going to get much in the way of results because the general scan presented me with 13. So let's see. Next up, this has been kind of my new favorite, actually, is having bullish EMAs with a mid-range scooter. So rather than a scooter that's, in the hot zone, maybe it's not all the way in the hot zone yet. So this one, again, the top part's pretty much the same as far as narrowing it down to a stock. Here is the PMO. I want it to be rising for 3 days. I don't care where it is, if it's below or above the signal line. And then I want the 20 to be above the 50, pretty much the same configuration. And then the difference is rather than having a scooter over 75, it is between 70 and 80. So let's just see what we end up with for this one. I'm thinking it won't be too crazy. Oh, 108. All right, so here's definitely where we got to use the scan dump. Or actually, let's go back and maybe make it a little bit narrower so that we can get less. So remember I said over here is a good way to do it. So let's just move that to 300,000. And run the scan. How did we narrow it down there? Now we're down to 78. Still an awful lot. So let's go ahead and let's narrow it even further. Let's just make this out of a particular group, a sector. And how would I pick that out? I'd probably just go to the sector summary. And then just check what's been, depending on my trading horizon, what's been doing well. All right, so discretionary, technology, these are the areas I probably want to look at. So let's go ahead and do that in our scan. And so we go down here to sectors and industries, and we're going to pick discretionary, add that. So I want it to be in discretionary, or I'm going to want it to be in technology. And here we go. Get back down there. Come on. There we are. I'm going to add that. Now it automatically adds these to the bottom. I want to focus down what the scan engine is having to work on right away. So I'm going to put that at the top. I don't need any of this anymore because I know it's in those sectors and it's going to present what I want. All right, well, you can't start any of your scans with and, so we'll take that out. And there is no such thing as something that's in the cyclicals and technology, so I have to put an or. And that's fine. And check the syntax, and that's fine. So now we'll run it. Remember, we had 108, we got it to 78, and now we've narrowed it to 31. Save it to the scan dump. There we are. Check it out in Candle Glance. And what are we looking for? We want a nice PMO configurations. That PMO is overbought. That PMO is getting on the overbought side, although I like the flag and the breakout, but it's not perfect. It doesn't have the PMO where I want it. This one, I like where the PMO is on black line. It's getting ready to move up. It managed to bottom above, almost above the 0 line. But right now, it's right at resistance. So I would leave that one out. Now you can just go through and you can hit the delete bucket as you go along. And then that's a good way to narrow. Let's see if there's anything in here that really makes me interested. That's kind of interesting. It looks like it could be an ascending triangle, but do I really see anything I like a lot? This one actually looks, New Relic actually looks pretty good here. Why? I see a declining trend. It's finally gotten itself out of. IT trend model and short-term trend model buy signals here. Look at the PMO, the nice move up, like I said, and just about to get a buy signal. So I like New Relic, and look at overhead resistance. We really don't have any serious overhead resistance till about 110. So that would have been my pick out of that scan. All right, so I'm just going to look at my other scans. I don't want to go and, well, we're already running a little bit over. So let's go ahead and just look at some of those other scans. And like I said, I can pretty much explain them, and I will have all of them out there. So a lot of them are going to be very similar. So for example, chart breakouts. It's a very simple scan. I'm just looking for, I used a predefined scan to give me a daily volume that's, above its previous. I'm looking for a PMO that is not above its signal line, and I'm looking for a PMO that was greater than yesterday's PMO line. So it's rising. That's basically what that's telling me. You can run that. Let's see, we got 30 results there, so that'd be a fun one to go through. Bottom feeders. This one, I'm taking, let me get in here. Again, top part's pretty much the same. All of those parts are the same. That's pretty much the same, the EMAs. The only difference is I'm including the 5-day EMA in here, and I haven't done that. So I want a short-term trend model and a buy, and I do want it in the hot zone. And if we run this scan, what do we have? We only have one, but that means it's probably kind of interesting to look at. Look at that double bottom breakout above it. The upside target is right there at overhead resistance. Nice scan, nice, easy way to do it. GVA, there you are. All righty, so that was bottom feeders. Let's see which other ones. I did those. That was a chart breakouts. That was bottom feeders. Okay. And we did chart breakouts. Let's go ahead and move to momentum sleepers. This one is a little bit odd in terms of my scanning. I actually changed the PMO to the MACD defaults. It's just faster. It makes the PMO move a bit faster. And I'm looking for momentum sleepers. So I kind of want to see that momentum in a shorter time period because I'm looking for something under the surface, something's going on. So that's what I use for that scan. And let's see, this one's neat. Here's the scan for dogs. And this one, I actually had a universe that I scanned. A lot of times it's easier just to pick the S&P 500 or NYSE because that way you know you're going to get the stocks you want. This one, you can see that it was looking for the opposite of what normally happens. I want it to not have crossed below its signal line, and I want it less than the previous and less than the previous day than 2 days ago. So that's kind of where I'm going with that. All right, I am about out of time. But again, I will have all of these scans in here. I did want to really help you with how to use them because they're pretty useless if you don't know how to use them when you do your sorts. So here's one turning point. All I'm really looking for is something that had a 50 200-day EMA crossover. It's moving from a bear market configuration into a bull market configuration. So that's all that turning point does. Under the radar. Just again, it's pretty much the same sort of thing. I like to use comments because I need to know what I'm trying to do here. And in this case, again, everything's here. I want a PMO that's rising just for 1 day, really. And it needs to be in a bull market. And then there you go, unusually high volume. So you can tell what I'm talking about. All right, so let's close this off. I pretty much went through my sifting strategy for you. Just some of the takeaways from this. Remember that membership levels, unfortunately, do matter as far as scanning, but it is one of the most powerful tools on StockCharts as far as I'm concerned, and worth every cent. Recommend that scan dump chart list so you can have that for your transient results and you don't end up with all those scans with dates on them at the bottom of all your chart lists. I know you have some of them. Understand what you're scanning for, and the best way to do that is to use the comment code and comment lines. Very invaluable. You want to know what you're looking for, and if you're like me, you don't always remember what the scan was set up to be. I showed you some sifting strategies using the PMO and EMAs, as well as support resistance. And then all of these I didn't have a chance to show you, but all of these can be converted to alerts. So if you want to be alerted every day, which ones are bottom fishing opportunities or shorting opportunities, you can set them up as a scan. Basically copy that scan code into the alert code area, and there you go. And that's all I have today for my favorite scans. I hope all of you enjoyed that. I'd love to get your comments on it. And as I said, I promise that I will have these in the Market Watchers Live recap, and that is for April 16th if you're watching this not live. So if you go to the April 16th, the Market Watchers live show or recap, you'll get all of this for your use later. All right, Tom.
Take a breath.
Ooh, okay. Well, at least we already know the first symbol, and everybody for the 10 and 10, and everybody needs to like the other requests, and the most popular will be number 2, and I'll be gathering the others quickly.
All right, we got that poll first, so before we get into the 10 and 10.
Oh, yes.
Have response regarding the scan engine and how often folks use it. So 43% sometimes, 34% almost always. So more than 3/4 of you use it at least sometimes, which I think is a good number. I'd like to get that up closer to 100%. Only 4% asked what is the scan engine, but hopefully after your presentation, that should go down to 0 next time, right?
I would think so. Yes. And what did you put? I know I'm obviously almost always. In fact, I could actually say always. I don't think I've ever picked out trading except on just a couple of times without using a scan.
Yeah, I would go with sometimes. It's not always for me because I've already put a lot of stocks into a chart list. So I keep pretty close tabs on them. And so many times I already have a general sense of what I want to trade. But I do use the scans against that chart list sometimes, which I think is really a neat feature. So you're not applying it to all of the stocks out there, but rather just to a chart list of the stocks that I'm looking to trade. And sometimes I'll do that with, say, the RSI. If I know most of those stocks are in uptrends, usually a scan returning all of the stocks that have an RSI between 40 and 50, a lot of times will give me pullbacks
Right.
within that particular chart list. So that can be very useful.
Yeah, and actually I have some scans. Obviously, I didn't go over, but I have them scanning against the sectors. I have the scoreboard indexes. I run the same scan. So that's how I find out that I have signal changes, is just by running alerts off of those scans.
Yep.
All right, let's do it.
All right.
Walgreens to start it off.
All right, Walgreens Boots Alliance. Well, this one is going in the opposite direction on my relative charts. I like going from left to right to the upside. Here in 2019, you can see all of these relative charts are declining. And essentially what that's telling us is that Walgreens Boots Alliance not only has been performing poorly on an absolute basis, but the group's been performing poorly. This is the drug retailers. And then Walgreens relative to the drug retailers has been performing poorly, relative to the S&P poorly, and the group relative to the S&P very poorly. So this is the type of group that I would have no interest whatsoever in. In fact, this is the type of a chart I'd be looking for if if we were in a bear market and I was looking to short. I would want stocks that are underperforming. In this case, I just simply ignore it. I need to see a lot more strength, not just in terms of absolute strength, but I need to see some relative strength coming back in here. I would go out on a limb and say if it wasn't for Walgreens, the Dow Jones would probably be at an all-time high right now. This is one stock that has been extremely weak, down probably 35% since the beginning of December, and that is weighed on the Dow. So not a big fan of this one. I would avoid it.
All righty. Let's see. The most popular in the chat room appears to be, let's see. SCCO. I think that's, what is that? Copper?
The Southern Copper. Yep.
Yes.
Okay. Well, the group is finally starting to turn up a little bit. SCCO, you can see, has just kind of been going sideways relative to its peers. Group's been performing very poorly relative to the S&P, and as a result, SCCO has. But it's starting to turn back up. And so when I see a stock like this that's beginning to show strength, that actually had some pretty good volume coming out of that base at the bottom, I think those are all good signs. But I wouldn't take too many chances with a stock that's been an underperformer like this for a while. So I like what's going on here in the chart. You can see the rising 20-day moving average providing great support just about at every turn. But I want to make sure that continues. So I'd keep a pretty tight stop here and not let this get away from me to the downside, given the relative weakness that we've seen over the last year. Things, like I said, have been improving, but don't want to get caught up and swept up in another move to the downside. So I'd keep a tight stop, watch that 20-day moving average. Otherwise, I think it's okay for now.
All righty, let's see. Next one up, very popular request, ST, let's see. Oh, that wasn't in there. STN. Forgive me, I'm a little bit off my move here because I don't see that. All right, let's go with Quinn Street, QNST.
Yeah, I looked at this one earlier because I was looking at media agencies. This one's just been underperforming ever since that gap down back in February. I'm assuming that was earnings related. I don't recall. But that is a level that we're going to need to eventually get back through. So a lot of selling kicked in from that level at 15.5. And you can see the volume was pretty heavy for the next couple of weeks as we moved lower. I think we're basing now, but this could just be a bear flag before another big breakdown. You can see multiple tests of support. I'm going to draw a couple of lines in here, but I'm going to say between 1240 and 1275. Look at all the different times we've gone down and closed at or in this range and held. So we got down there with all the selling that took place in February and March. We got down to about 1275. We've now tested that level a few different times. I'd be especially cautious if we were to close back below about 1230. But I really don't like the stock at this point. This was one that I did like for a while, but that gap down, and again, I'm assuming it's earnings, that gap down and all that selling that took place, I think we've got a different chart here. I think that was a change in character from an uptrend to possibly a downtrending chart. I would avoid it. Let's keep in mind, too, that the media agencies group, which Quinn Street's part of, has just broken out today to a 52-week high, and look at what the stock's doing. So that tells us pretty much all we need to know.
Yeah, I think you're right. All right, let's see. Next one up is going to be Trex, T-R-E-X.
All right, Trex. Getting close to a key resistance area. It is been in a pretty good group that's been moving higher. Trex is just, for the most part, just going along for the ride. Moves up, moves back down, not showing any consistency to the upside. So I think that there are definitely some question marks on this chart. But currently, I do like the move that it's made here over the past few weeks. Probably is going to run into some selling as we get up closer to 78, 78 and a half. So I'd maybe look for that. If I was in the stock with this kind of a move to the upside, as if I hit 77 and change, that would probably be enough for me. I'd probably take the profit, move to the sidelines, and wait and see whether or not we get through, or maybe we pull back and hit that rising 20-day.
All righty. Next one up is AMC Entertainment, AMC.
All right, AMC, nice breakout, good volume. I think this one is actually starting to look really good. The overall group has been trending higher since that December bottom. And just recently, AMC relative to the group did set a 2019 relative high. Relative to the S&P, it's now breaking out to a multi-month high. The group relative to the S&P is just kind of going sideways. So not the best group out there, but this is an improving stock for sure. So I'm fine with it. I keep my stops fairly tight, but I like that breakout that it just made above about 16. It came back down, tested that, kept moving higher. And then also on that last gap up, you can see that was the open where all the buyers came in. I think this 1540 to 1590 area is a key support zone for AMC, but I do like it. I think you got an improving stock here.
All right. This one reminds me of the $6 million man. OSI Systems, OSIS.
Okay, this one I think I probably could have included as under the radar. I mean, after the big move up back in January, it's been simply going sideways here and showing some underperformance, but it hugely outperformed on that gap up. So it's just kind of consolidating here. And while it consolidates and the market goes higher, that's what's been leading to some of this relative weakness. But I do still think we overall have an uptrending stock relative to its peers, even though it has come down the last couple of months while it's consolidated. What we want to see is confirmation. And the group is breaking out relative to the S&P 500. And there's the key levels. There are the key levels. Here was your gap up on big volume. And notice when we came back down, see how we stopped on the selling right at that open? Because we opened there, we sold off, and then the buying kicked back in. We went back through the open. That created that as a key support level. That's been holding. I suspect we're going to break out on this one. I'm still a fan, but we do need that breakout for confirmation.
All righty. Let's see. Next one up, and it actually came up on one of my scans when we were talking about it. New Relic, NEWR.
Yeah, the group, it's in software, and software is broken out. Part of the problem with New Relic is it's a small cap stock. And small caps since the end of February have really struggled against the S&P. And I think that's what's leading to this relative strength or relative weakness that we've seen the past couple of months in New Relic relative to the software and to the S&P 500. But the group software continues to be strong. So here you've got a really good group. I think what I would do is now that we're back above that 20-day moving average, because it has been lagging its peers, I would just keep a tighter stop on it. If it were to break back and close below that 20-day moving average, that would be certainly concern to me. And if it broke below the recent lows, given the overall market and what software is doing, that would definitely be a red flag for me. So watch 95. This is where all the selling came in back in early February. We held that level. Buyers came back in, and we have since put in a couple of hammers right at that 95 level. Close below 95, I'm out. Otherwise, I'll kind of stick with it and see maybe if the small caps start to move again. maybe we get a little relative strength out of New Relic.
All righty. Our only utilities request AES.
Okay, AES Corp. This I think I've talked about. I really like this one overall. You can see the group has kind of weakened a little bit relative to the S&P. I think I would draw in a relative strength line here that has been holding. If you go back, here was our breakout right here above these tops, and then we came down and tested it. I'd watch to see if the group can continue to hold up on a relative basis above this line. If it doesn't, then I think it would start to draw maybe a few more question marks here on the stock. But everything else on this chart, I think, looks really good. You've got one of the top performers in the space. The group overall, even though on a relative basis it's struggling, on an absolute basis it's still been good. And you can see AES has been a great performer. So good stock. Be careful if the group breaks down on a relative basis. But otherwise, I think this one's fine.
All righty. Let's see. The next one I have for you is TDY. Teledyne.
Okay, just broke out to a new high, taking out the September highs. That's good, and especially with aerospace pulling back. Look at the volume. Now, this is not a huge volume stock, so maybe a little bit less liquidity than I would like. But still, the volume, I think, here has been pretty good on this push to the upside, breaking out to new highs. So I think this is a stock you can clearly see has been a very good performer. And that's been despite a really weak aerospace group. So I think with the volume moving up and the relative strength of the stock, I'm fine with it. Maybe look for a pullback if you're looking for entry. That breakout right there above about 249. Excuse me. I think we could see a pullback back to that 249 level, possibly even to the rising 20-day moving average. But I like the volume trends. I would suspect this one goes higher.
All righty. Let's see. The last one I have for you is PCTY, and that is Paylocity Software.
Yeah, another one in software. I really like the pattern here in the breakout. I've seen ascending triangle, a stock that's been outperforming. This is good news for the stock. I really like this one. Let's pull up the annotation here. And here is your equal high coming across. I think that's pretty clear to see. Here is your improving lows, so the higher lows. So off of an uptrend, you have equal highs and higher lows. That's an ascending triangle. We're breaking out, and look at the volume. The only negative possible here for me on this stock would be a reversal today, leaving a false breakout, a long tail. But even if we did that, I think if we pulled back to the 20-day, it's probably more of a head fake than anything. Maybe we go back to that 20-day. But if we confirm this on the breakout today, I like PCTY. I think it's in one of the stronger areas. Great pattern, bullish pattern, breakout, heavy volume. I think Paylocity looks really good here.
All right. And that is it. That is today's 10 in 10. Here are the symbols that Tom just annotated. I'll have these charts up in the Market Watchers live chart list after the show. So you can go there, copy them, and use them as you like. All right, let's go ahead. We do have our final market update right now. And away we go. Well, the markets did start higher on the day, but they have really been pulling back. But now moving sideways, staying in positive territory. So that's good. Dow is down just over 40 points currently. And the S&P, is up almost 41 points today. And S&P 500 right now is up a little over 4 points. NASDAQ, though, is hanging in there. It had that big gap up, moving mostly sideways right now. It is up almost 34 points. S&P 400 has been moving and consolidating mostly sideways. Nothing has changed there since the past 2 days. Russell 2000, very volatile. Up and down here. Currently, it is up just over 5 points. TSX is, it rose and it is pulling back similarly to the U.S. markets, up over 15 points. Treasury yields currently rising, reading 2.592%. VIX is lower. on the day. So we're seeing some complacency. We've got a reading now of 12.15. That is really low. UUP, we're seeing a continuation of yesterday's rally that started at that low earlier. From yesterday. We've got gold has gapped down, but is moving sideways right now. Currently at 120.37 for GLD. USO had a rough morning, but is starting to rise. Looks like it wants to continue the rising trend that began off of yesterday's low. And finally, TLT gapped down and continuing lower. TLT had hit some really nice highs, but it's been pulling back quite a bit lately. And the last thing we should look at is what's going on with our sectors today. And as you can see, financials certainly leading the way, up 1.15%. Energy is behind that, up 0.5%. And real estate, excuse me, really hurting. And I believe we saw this as well yesterday. Real estate is down almost 2% right now. That's all I have for the final market update. I am passing it back to you, Tom.
All right, let's take a quick look at the NASDAQ because I think most of this sideways action, this has been really boring kind of movement to the upside and so typical of a bull market when you get that volatility, as Erin just mentioned, down at the 12 level. A lot of this big back and forth action just kind of dissipates and falls to the side. And we see this really boring kind of, okay, Dow up 40 one day, 70 one day, back down 25, up 100. Well, here on the NASDAQ, you can see we've now climbed back above 8,000. Got a nice gap up this morning, holding on to these gains so far. And this comes on the heels of the 60-minute PPO working its way back down near the center line, just starting to accelerate back to the upside. So I think in the near term, we might have a run at those highs that we saw back earlier in 2018. So if we go and look at, say, I don't know if I can get it with a 6-month. Let's go back a year here. I think if we look at this year chart, you can see 8,100, just above 8,100 was the high on the NASDAQ. So now we are at 8,010 roughly. So only 1% left to go here on the NASDAQ to get to those all-time highs. S&P 500, same thing. I mean, we're now 2910, got to get up to 2940. So we need 1%. And given that low volatility reading, the market tends to deal with bad news really well when volatility is low. And I expect we'll continue to climb up toward that all-time high, and we'll see whether or not we get a little pause when we get there. Okay, let's move on to the final segment, which is Under the Radar. And I thought what I would do here is take a look at a couple of different industry groups and some stocks within those industry groups. And I want to start off with one that hasn't been a great performer, but seems to be picking things up a little bit as we head into earnings season. And this is in the consumer discretionary space, and it's clothing and accessories. And you can look back here over the last few months or last 3 or 4 weeks here and see that on a relative basis, clothing and accessories doing extremely well relative to the S&P. So we've seen a lot of leadership. Now, we saw this back into the second week of February, and that relative strength kind of just kind of reversed and we moved back lower. Now we're right back up to this level. I'm looking, number one, to see if we can get this breakout, because if the group were to break out relative to the S&P, we start to see more money rotating into the group. We already know what happened in 2017 and 2018. This group produced some great winners in the space, a lot of relative winners before we tumbled into the fourth quarter. Now we're starting to pick back up again. I think also a number of these clothing and accessories companies tend to be smaller cap companies, which have been under pressure a little bit relative to the S&P. So if we can see some more small cap relative strength and we get this breakout in the clothing and accessories area relative to the S&P, I think this could lead to some solid performance as we go forward. So which stocks in this space might be considered under the radar? Well, that's what we're going to look at. So let's pull up first VFC. This is VF Corp. Now, the stock had gone sideways in February and March, did just recently make a breakout, getting close to a 52-week high, has not made it yet. And I'm going to bring up a relative chart. Let's look at all these on relative charts. But here you can see the stock not only has the clothing and accessory group broken out to absolute highs, but look at VFC relative to its peers. Lots of tops up here around this 0.27 level. It's strengthening again. A breakout there, I think, would be extremely bullish for the stock. And then if you see the stock making a breakout, or the group, I should say, making a breakout relative to the S&P, and you've got this stock making a breakout relative to its peers, that could be the catalyst for a big move to the upside. So watch overhead resistance on BFC. Next up is PVH. PVH Corp, big gap up in March. Sideways consolidation, but starting to move back to the upside. You can see this is one that was under pressure on a relative basis versus the clothing and accessories area for quite a while. But with this gap up and heavy volume, it actually moved to a high, a relative high that we had not seen for about 5 or 6 months. And now we're trying to come back up and break out again. Once again, let's watch the group to see if the group breaks out on a relative basis. If it does, this could be one of the new leaders. I think this is a character change on the chart. Lululemon, LULU, gap up. Now, this one maybe isn't so much under the radar because it's a fairly popular stock. It did already make the breakout, heavy volume. But again, because the group itself hasn't made a relative breakout here, that's the reason why I would consider it still under the radar. This is one of the best performing stocks in the space. So if the group breaks out, this would be a good one to consider. CRI, this is Carter Holdings. You can see the breakout here above the high that was set back in February. That was 102.5. We did just recently take that out. And once again, on a relative basis, past 2 or 3 months, we've been seeing some nice relative strength here. And on this move right here, where we went up and tested that high, you can see on a relative basis, CRI versus its peers had broken out to about an 8-month high. So I like the fact that this continues to put in these higher relative highs and relative lows. This is one that certainly I think is under the radar if the group were to break out. And then the last one in this space I have is COLM. Columbia Sportswear came out with great earnings about 2.5 months ago, maybe just a little over 2 months ago, and has been sideways consolidating. So we saw that huge relative spike breaking out versus its peers. But the last 2 months, it's just kind of been going under the radar as it's been consolidating. Hasn't lost that breakout level. Simply has gone down, tested price support, the 50-day, and I think could be poised for a move to the upside. So I would consider Columbia Sportswear under the radar at this point. Next up is Internet. So let's change this and take a look at what Internet's been doing. If we look at the Internet space versus the S&P going back the last several years, actually we don't need this much room. Let's just, you can see that it's been a great relative performer for the most part. But let's just pull up the last 3 years. You can see the uptrend that was broken in the second half of 2018. That was a relative uptrend. So we were under pressure for 4 or 5 months, but we have since come out of that, and we have been putting in higher highs and higher lows on a relative basis. So until this changes, Internet stocks, when they get rolling, that's a group you want to be considering. They tend to move very quickly, much like these semiconductors. And so when money is rotating into that group, normally you have a number of opportunities, number of individual stocks that you can certainly make money on. When I see moves like this to the upside, I want to see that 20-day stay above the 50-day as much as possible. When it breaks back down below, that's where I start getting a little bit nervous. Also, watch the PPO on these relative charts. Anything above 0 is telling us that we have relative bullish momentum. So that is generally a good sign. Another breakout here would be even a better sign. So what stocks might look good here in the Internet space? Well, this is one I have talked about a little bit recently, AABA, which is Altbaba. I think we got a nice uptrend followed by a cup, pulling back, hitting the 20-day. Look at the rally recently here in April, and look at the volume coming in on that move. I think we've got some accumulation taking place. Again, the absolute strength in the Internet stocks is apparent. Relative strength also apparent since the November low. All right, the stock relative to the S&P 500 continues to uptrend. And I would say even relative to Internet, it continues to put in these higher highs, higher lows, higher highs, higher lows. I would look for maybe another move higher on a relative basis if we get this breakout. So I would be watching that on AABA. Next up is Snap. Snap has been a great performer in 2019, one of the best performers. So maybe this one isn't a great example of under the radar, but the group overall, I think, has been for the most part under the radar. And another breakout here would be very bullish, not only for the group, but also for Snap, which has been a huge outperformer in this space. And it's been doing so with increasing volume. 20-day tests over the course of the past couple months have been great entry points into Snap. Seems like we're kind of working our way back down toward another one here. Yandex, YNDX, not quite making a breakout yet above that July high from last year, but volume did pick up here as we broke out above the recent highs. 36 was the top back in October. We really struggled to close above 36 in March. Well, we've now gotten through and the volume has picked up. So not only do we have internets breaking out, we've got Yandex, which is one of the best stocks relative to its peers. And if we can get another breakout in internet, that could launch the stock to its high above the July high. IAC, this is one's been consolidating for a while. Interactive, check out these tops. Triple tops, you got the higher lows. Could probably draw in an ascending triangle here. Or you could consider this maybe a long-term cup, and we're just in an extended handle. No matter how you slice it, a breakout above 225, I think, would be very bullish. Volume has seemed to improve here of late during this consolidation phase. Moves up tend to be on much heavier volume than moves down. So I think we've got a stock that is certainly poised for a breakout. And on a relative basis, it's actually been underperforming over the past couple of months. But after a huge relative move back in August, September of last year, we've been going sideways. So I think that maybe the downtrend is simply back to test a relative support level. A breakout, though, above 225 would be really bullish for IAC. Keep this one on your radar. A couple of smaller companies that I wanted to point out, because, again, if small caps begin to outperform, that would bode well for a stock like Envestnet, which is already broken out, even though small caps have been underperforming. So I think when you get a stock like this, it's breaking out good volume and on a relative basis, continuing to move to new highs. I think there's some good news in store here for ENV. I would not be surprised to see a strong earnings report coming up next time with ENV. eGov, after a huge move up recently, we did get sideways consolidation. Let's try it one more time here. There we go. Big move up in January and February. Stock went from 11 and change to 17 and a half. 50% move in probably 6-7 weeks. Yes, it hasn't gone up higher the last couple weeks or couple months. Let's give it a little bit of leeway here. The stock made a huge move. I think it's consolidating those moves, and I would not be surprised to see the relative strength here start to turn back up again. A breakout above 17 and a half, especially with volume confirming, would be very bullish. All right, last one in this space. This is Yext, YEXT, big move up. Look at the volume coming in on that last push, clearing the 20 level. That is where the reaction highs came in. We couldn't get through 20. When we finally did, the volume came in to support it. I would watch 20 to the downside. It is a stock that began showing some nice relative strength. I think a little profit taking, a little sideways action here the past 6 weeks while small caps have underperformed. I think maybe hurting the stock a little bit. But I believe we're going to get another breakout above 23. I think it's just in a consolidation zone right now. Last group, semiconductors, and I could spend a lot of time talking about semis, but first let's just pull up the relative strength. And I think you can see it was underperforming. See how that the PPO was below the zero line? That tells us we have bearish momentum. Notice what happened to start the year. We broke out of this downtrend. The 20-day came above the 50-day. We have maintained our position above that center line, and semiconductors continue to strengthen relative to the S&P 500. So that's going to set up a pretty nice backdrop for stocks in the semi space. Here's one, Applied Materials, just starting to make a breakout. I think this is good. And watch its relative strength. It is now trading relative to the S&P 500 at its highest level in about 7 months. Still needs to do some work to strengthen against its peers, but its peers are very strong. So I think this is one that hasn't really performed that well on a relative basis that could just be starting to get its mojo. Texas Instruments, another one I think that could be starting to get its mojo, did break out above the June highs. So it has recently just broken to a new high. On a relative basis, though, it's been downtrending. I still think overall, when we look back, we see an uptrend. So I think the 2 months worth of downtrend, relative downtrend, actually sets up a nice opportunity here with Texas Instruments. SWKS, this is Skyworks Solutions, just making a double top breakout above 87.5 and starting to turn higher on relative basis. These relative charts starting to look really good here with SWKS. Last couple here on semiconductor ON. Watch all these tops. It's been underperforming recently because we're consolidating a big move. Here was another 50% move in 2 months. Sideways consolidation, a breakout above 23.25 with volume, in my opinion, would be very bullish for ON Semiconductor. MPWR, this is Monolithic Power Systems, just making a breakout, and the relative strength you can see building versus the semiconductors. Stock has now just broken out relative to its S&P 500, to the S&P. So I think this one looks good. Last two, MKSI. Another one that broke out on increasing volume in March, had been downtrending. I think we've got a character change here. Stock is trading much more bullish. And even though it's not way up here on a relative basis to its peers, you can see at the beginning of April, it moved to about a 7 or 8 month high relative to the semiconductor index. So MKSI certainly improving, could be under the radar. Last one, AMKR, Amkor Technology. I think we're in a cup. I think this is a big move up. Here is that cup forming. This is when small caps topped relative to the S&P 500, by the way. And just to emphasize that, let me show you here on this chart. You can see right in here, February, see how the small caps underperformed? That was the same time AMKR pulled back, but it's starting to strengthen again, even with small caps underperforming. This is one I think I definitely would want to keep an eye on. I wouldn't be surprised to see a breakout above 950 coming. And that is it for the under the radar. So those are just 3 areas of the market that I think are starting to show promise or have shown promise in 2019, and some individual stocks you might want to consider as a result. All right, Erin, good presentation on the scans. Always good to learn more about the scanning.
Yes, I have been learning and continue to learn. That's why I keep adding to my scans. I'm actually getting them all ready, guys, to copy them into the Market Watchers live recap for this evening. And the 10 and 10 stocks are actually already in the Market Watchers live chart list. So
awesome. Yeah, and one other way to think of the scan, too, is if you go in and look at scooter reports, that's in essence a scan. StockCharts is putting those scooter reports or putting those stocks, large caps, mid caps, small caps, in scooter order. So they're effectively scanning all of those stocks and putting them in order of the StockCharts technical rank. That's where I got all those stocks, by the way, on those 3 industry groups. I went into the scooter reports. So kind of a predefined scan right there.
Exactly. And those are really, I mean, I know people like my scans and you can, of course, copy them, but a lot of times it's nice to go to a predefined scan that you know what it's looking for, and then adding and subtracting the things you look for and like. That's what I did with a lot of these. But really, once I came up with my general PMO scan, everything, almost everything is related to it in some way.
Yep. All right, well, that is a wrap for today. Do want to let you know Dow Jones currently up 26, NASDAQ up 33, S&P still up about 3 points, and the Russell up 4. Want to thank all of you for being with us today. Please remember to complete the survey as you exit. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great afternoon, everybody, and we will see you back here tomorrow. Happy trading.